The American consumer is spending more money than ever before. We've just received the latest jobs numbers, and the revisions will absolutely blow your mind. And Wall Street seems to be placing huge trades on volatility. So, what exactly is going on for us as investors and traders? Well, in today's video, we'll take a look at the positive gamma stories. And of course, we need to talk about one particular stock. Yes, as we've suspected for a little while now, Tesla is looking dire. How much worse could it get before it goes better? Today, we're covering stocks, commodities, and cryptos. Join us right now. Well, welcome back, everybody, to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we're taking some complicated concepts and simplifying them together. What exactly is Wall Street doing right now, and why should we be focused on certain areas of the market? Well, to begin that story, let's talk about debt. Yes, it looks like all consumers around the world, but in particular, the American consumer is borrowing big time. Take a look at the latest numbers from Bloomberg about what we saw when it comes to consumer credit in December. $40.8 billion. Who's going to be able to pay this back exactly? Yeah, this is always a problem whenever you see so much borrowing starting to come on. And as you'll notice, the last time we saw numbers like this was a little while ago. So what does it mean? Well, could we be going still into a sugar rushing market and then possibly a cause for concern? Well, it's something we've talked about for a long time now on the channel. And of course, this continues to be the backdrop of growth, but also concern in 2025. Speaking of concerns, it looks like a lot of people actually expect inflation to come back. And I'm interested to hear your opinions. Do you think we'll see reinflation in 2025? Let us know in the comments down below. Now, before we go any further and we take a look at Wall Street's dark pool liquidity, options flows, and some of the other things going on, we need to talk about the latest jobs numbers. And it was as we always expect. Don't look at the jobs number itself, look at the revisions. And guys, this was ridiculous. 143,000 jobs produced. Obviously, we know that it was down from a little bit from the expectation, but here's where things get ridiculous. If we combine both November and December's revisions, we're getting plus 100,000 jobs. I mean, can you take any of this stuff seriously anymore? Absolutely not. And of course, what that led into was slightly higher yield expectations. Basically, we are not necessarily going to get anywhere near the amount of cuts that the market was kind of pricing in for 2025. Now, could that be a concern? Or is this actually good? You know, more jobs, better stuff, everything like that. Well, it's like a catch-22. The market wants cuts. It also wants a healthy level of jobs. And of course, this is where you're going to have that to and fro in the markets right now. And it's part of the reason that we're stuck in a range, which we'll be looking at later on and what that could mean. But when you're looking for strength, you're usually looking for these particular reads. Things like equal weighted market improving, which has happened so far. Things like the Dow Jones Transportation Average, which has been, frankly, pretty poor. And of course, one of the most important reads of all, which is financials. Is the debt market going well right now? Well, of course, as we just saw at the beginning, we've got some massive debts being piled on to the American consumer, and banks are absolutely loving it. So why is this important? Well, banks are now the best performing pretty much here since November 3rd, 2023. And you may not be aware of this, but they've absolutely kicked pretty much any of the other sectors of the markets. And the most important thing to note here is that you have both financials and, of course, consumer discretionary out in front. Now, why is this important? Well, it shows us usually a mid-cycling market. And that's why in 2025, we begin the late cycle stages of the market with potentially some of these other sectors, healthcare, and some of the others starting to potentially do a lot better. So let's take a look at what Wall Street is positioning for this week ahead. We've got some big numbers. We've got the latest inflation reports. And of course, we've got Jerome Powell and the Federal Reserve coming out to completely annoy us as traders and investors. First up, let's take a look at these VIX futures. It looks like the UVIX got a whole bunch of trades coming in just at the end of Friday. Now, why is this important? Well, it could be positioning for volatility this week. And while that doesn't necessarily mean we're going to crash in the markets, it's something to keep an eye on when you're taking a look at market structure. Remember, these trades are important. Another thing that we've seen recently has been a huge backwards and forwards from bulls to bearish to bullish to bearish. And this is probably the wildest moves I've ever seen on sentiment reports. If you take a look back, in 15th of January this year, only 25% of people were bullish. So of course it was a great time to be buying the dip at that point. Then only a week later, 43% of people were bullish, and then we end up seeing a sell-off. And what has this produced? Yeah, a pretty much chop sideways style market. So we're being pulled, we're being pushed. We've, of course, had all these sorts of news. And in 2025, news is going to be the worst enemy of the retail trader or investor. So remember, if you want to cut through that with data, with everything to do with flows, and of course, some of our TA, make sure to subscribe to the channel. We'll be bringing it to you all year. So let's talk about where we're at right now. Could we see a sell-off in February based on this volatility kind of being purchased by the street? Well, the answer is, of course, yes. Usually somewhere around the middle of February, we tend to see a pullback in post-election years, which is, of course, where we are right now. Then do things get better, though? Well, the answer again is usually simply yes. Of course, there are a lot of complexities that go into this year, but if you're taking them all in consideration, that's usually what happens. Let's take a look at some of the hedges now. Now, of course, we've been incredibly bullish on silver and gold, but there are some problems starting to come through. More and more and more trades at these highs. And we first alerted you guys to this Thursday last week. And obviously, we're starting to see even more trades on both silver funds and gold spot funds when it comes to these precious metals. And while we still remain bullish on gold and silver throughout 2025, there's a chance that we might get a sideways or even a little bit of a pullback here. So be warned of that. What about the American consumer in terms of the market? Well, of course, if we see debt being written the way it is, that usually goes into consumer discretionary. And at this stage, everything looks pretty good. Consumer discretionary is still doing well, and concentration in the market is still holding up, as you can see here in the latest numbers. This is, of course, something you need to be incredibly worried about, though, because as you guys can see, concentration is the highest it's ever been. We've never seen these top 10 stocks and top 5 stocks making up such a huge portion of the market as they do right now. Now, of course, we're still in earnings season and we are pretty much beating all expectations. At this stage, we're going at that 80% plus number. And this is important to factor in when you're taking a look at whether a dip right now could and should still be purchased. Remember, we've shown some charts, if you go back about a week or two ago on the channel, where basically we've had, if we reach these 80% numbers, which we are so far, that we usually go into the last third of the standard kind of bull market runs on what usually happens. Now, during that last third, it could look totally different and rotate. And one of the reasons why that may happen is, of course, the street is expecting this year to improve in both mid caps and small caps. If you haven't been looking at mid caps and small caps, this is probably the time that you want to start really considering that, as we've seen a lot of strength in the equal weighted market as well as some basing formations happening in some of the more defensive stocks. Now, for the week ahead, there's still a lot of news. As you guys can see here, we've got a whole bunch of options expectations on whether we're going up or down in terms of how much percentage. Shopify is one of the biggest, 11.4% up or down according to the options market. And then we've got the likes of Datadog, John Deere, which is going to be an interesting one, Robinhood, which a lot of you guys obviously like that stock, and we certainly traded it pretty heavily last year. And another one, which is going to be Coinbase. How are they looking? What's the crypto market doing according to the earnings? In terms of seasonal patterns and crypto, before we go into the flows here for the S&P 500, we do know that February traditionally is a pretty good month. 82% of the time, Bitcoin is up from the start to the end of the month, which is important. It's the best month of the year, equaled with October. And of course, net inflows are still looking pretty good, especially when you're looking at Ethereum. Now, of course, for Bitcoin, it dropped a little bit here, but you've got to remember Ethereum took an absolute hammering last week, and then it got all of those big trades that we started to see come in through it. Now, why is that important? Well, of course, it's forming a base here where we're going back to the most traded zone, 2,600. If we can get back above 3K soon, that's going to give a lot of positive momentum. So Ethereum, Solana, XRP, all of those coins starting to look like they're getting a much better base on them, while pretty much Bitcoin stays within a range. Let's now talk about rotations. We saw this happen on, of course, the Friday of trade. And generally speaking, the worst was home builders suffering a bit, I think, due to the jobs number revisions. And of course, we saw yields spike up across the board, which is something we'll talk about in a moment. In terms of 5-day averages, gold stocks have been the best, but maybe they're coming to a little bit of a pause here. And the worst has been agriculture and again, home builders. Now let's have a look at the closure. 6,100 is just too much for these markets every single time we get up there. And of course, that's exactly what happened again. A series now of lower highs coming in on the daily as we cannot break through the resistance call wall. Now, why is this important? Well, of course, is the market still in bullish sentiment? Is the market still in bullish characteristics? Well, the answer is quite simply yes. Volumes have, of course, gone up. Dark pool activity is, of course, rising through. But one of the most important things you can ever do on markets is to have a look what happened during the session. And you'll notice here that as of the non-farmers numbers, we basically just dropped down as yields changed. Now, if we look at the futures market and we take a look at how that acted, again, they are kind of negative candles. And they suggest that maybe there's possibly here a little bit more selling to happen. But again, if you want to be neutral in markets, guess what you can now do? You can mark out 6,100 plus, we get a daily close, and you can go for momentum. Now, why would you be looking for something like that? Well, have a look here at these wick rejections. We know that if we close above those, the markets have made the decision. 6,200, positive gamma, we're ready for the next kind of position. For now, though, we're stuck between 6,100 and, you guessed it, 5,900, 5,950. And effectively, the options flows are telling us exactly that. Have a look here for Monday, then have a look through till Tuesday, and you'll notice that we're getting tons of 6,000 puts being kind of put in the system, and that we're seeing a lot of 5,900s as well. So it doesn't matter really which day you're looking at, we're getting all these 6,000s and these 5,900s. We'll update as we get more information, as we get closer to the inflation numbers. But yeah, these are the important levels. Now, if we're able to get through 6,100, of course, the next big area is going to be 62, and it's all going to be down to the daily closes. So are we stuck in a range? Yes. And for day traders and for scalpers, that can be absolutely perfect. But for a swing trader, you're really either hodling your levels at this stage or you're waiting for those bigger breakouts either way. Now let's take a look at whether the other stocks can tell us anything. Well, as we know, Nvidia, yeah, you can't tell me, and you guys know this, that these levels don't matter. We've been talking about that 125 into 130, and guess what happened all of Friday, and it's happening right now. Nvidia is being stopped by that massive call wall. We have so many options sitting at 130, and if Nvidia is able to close above those, then of course it could go absolutely ballistic. But for now, 130 is the trap number. So of course, some people were taking profits at that zone, and we are now at the call wall that tends to go through the next couple of weeks. Meanwhile, we've seen big sell-offs on Tesla, and we kind of suspected this may have occurred due to a series of lower highs coming in on the stock and just generally horrible sentiment across the board. Whether you're reading articles or you're just seeing things that are going on, a lot of people have concerns about, of course, the cars. Now, you may argue, but it's an AI business, don't worry about it. I would just say, look at the multiples. And of course, the multiples went as high as almost 200 forward earnings at one stage, and they need to come back down. Now, one of the levels we've talked about a lot recently is 340 and 330. So, of course, these two zones are going to be important, and you'll notice that we're starting to get a lot more kind of put walls around that 350 zone. So at 361, could there be still more to fall for Tesla? It seems kind of likely. Even if it rallies right now, I could see sell demand still coming in. What do you guys think, though, in the comments down below? Now let's jump on over to the lead indicators. What is going on with bonds and options? Well, they've dropped off. So again, concerns in the markets, at least temporarily, is certainly lessening there, which is a good sign. What about treasuries? Well, they've broken out. You can see here the basically inverse head and shoulders, and a lot of people are now going to be looking for 94 for treasuries. Even with the yields kind of spiking back up, there's going to be a couple of key levels that you want to look at. And speaking of yields, take a look at these trend lines. US 30-year, US 10-year, US 20-year, they all are kind of sitting on these particular zones. And if those do break and set alerts underneath those, they'll be important. If we have a look at the short yield, though, and this is why the Federal Reserve's comments this week will be pretty important, the market is not looking at anywhere near the amount of rate cuts that were once being priced in. So, of course, at this stage, we are basically just sitting, waiting to hear more from the Federal Reserve and what it potentially might be doing. And I expect to be updating you guys throughout this week, and we'll be talking about this together, of what exactly is going on with the market expectations on yields. It's going to have a big impact into the US dollar. The tariff discussion is obviously going to be a big thing here, and seeing what the US dollar actually does. And as we always say, guys, it's not going to be about the news, because if it's in the press, it's in the price. We're going to be looking at the actual price action itself to delineate whether we are really worried about a stronger US dollar that could put a lot of downward pressure on a few items, or whether we're going to see weakness in the dollar and a complete narrative change. So this will be a very important chart to watch. No updates, though, on the dollar just yet. What about gold? Well, it's doing really well. Everyone's talking about it again. As you guys know, we've been long gold since the 1700s, which you guys always say 1700s price-wise, guys. So we've been gold long for quite some time, 18 months plus, and it is doing very, very nicely. But I have seen a lot of people stacking in. So, of course, when everyone talks about something, you could be at a crescendo number. It's not actually that gold is hitting like a really scary number right now, although it is, of course, starting to moderate. But silver did hit that target we had. So we said 32.60-ish was first resistance, and you see it nailed that during the Friday trade. So I wouldn't be surprised if we go into a little bit of sideways here. But if we're able to break through 32.60 in the future, silver's probably going to fly. And I'm still very positive on it over a multi-month, but we do need to be worried a little bit here of the possibilities of those dark pools and a bit of profit taking into the hype surrounding some of the best currencies. Yes, I know they're technically, people call them metals, but they're currencies of the world. US oil, what is going on here? Well, it keeps dropping. No updates there, guys, on that one. And then we move to Tesla, which absolutely obliterated this bullish hammer and, of course, looks super negative. Now, at this point, you have to say this chart doesn't look fantastic. It kind of looks like it's going down to that level we've discussed recently. And yes, it's pretty much moving into negative gamma events. So at this point, yeah, you kind of got to be negative on Tesla, which is against a lot of the market. And it's kind of just going back to where you would say is a better value for it. Now, whether that's news or sentiment or too many retail traders with bull calls that are getting slaughtered on Wall Street bets, I don't know, guys. But in general, we've been seeing this in the price action. So not exactly great price action. Could it, of course, rally and go against all of this? Yes. But I think the thing is that in general, the sentiment is just not there at this stage, and we're not catching a bid. Every time a bid's coming through, it is weakening. And that's why you see these series of lower highs that keep coming through on this stock. So for now, we're looking at that 350, 330 range. And we kind of continue to want to see a bounce off that if it's going to happen. Now, speaking of much stronger charts, let's have a look here at the weekly on Nvidia. And you'll notice that is an incredibly strong candle because it closes above what was a long leg doji candle. So effectively, big volumes coming through, most traded range. That was an excellent trade. I'm sure a lot of you guys were all over that one, buying up that 116, 115 range. That was just dark pool city. Like, there were so many dark pool trades going through. It shows you kind of the manipulation of Wall Street really on a chart here. And of course, now we're at that super resistance zone. If we break through the resistance, could we go all the way back up to 140s? Yes. And if that happens, yeah, it's going to be huge, because as you guys know, this actually is a Wyckoff distribution towards the downside. Now, it did sell, so you could argue, well, this must have been just where it was going. But to wipe that out and to get rid of those bears, the squeeze could be serious business. So just remember, 130, we're at resistance. We're watching Nvidia incredibly closely this week. Another stock we're watching is, of course, AMD, a retail favorite that continues to suffer after earnings as well. We're still looking for more evidence. We've got big volumes, but we do not have the evidence of way more transactions. I can tell you that there are dark pools here and there are dark pools here, but we need to regain past that price. And if we do, we may have just seen the bottom of AMD. Stay tuned on that one. Let's move over to one of the good news stories at the moment, which is, of course, being China stock. And look, we've been super bullish on China stock. You guys know this is completely contrarian to the news, to what you hear in the media, to what you see in everybody's main kind of arguments. But again, it's just about flows. It's just about the fact that you do what they are doing, not what they're saying. And I think, again, China has really been reiterating that. You might say, well, this is only going up on DeepSeek or something. that's just a storyline. Again, the flows, the movements, the way too many bears sitting in the markets, the massive short squeezes, all of these things, as we've illustrated over the last couple of months, really feed into price. And of course, it was a great close, and we'll be very interested to see the narrative here of what is actually happening against a lot of the shorts as we see, of course, past Chinese New Year and that markets open up into true liquidity. We'll be watching that one, but for now, the close is pretty strong. US 2K did not manage to get through the resistance, which is, of course, a trigger point. This is one we'll be watching this week, so watch that 23 kind of 30 zone. That's going to be very important. We'll set a little alert up here so you guys can see where you want to be putting that alert if it does happen. And I think that'll be a big trigger point for the bulls, and that could be pushing the 6,000 plus narrative on S&P, and all of a sudden it could be all green, all good. So this is going to be a very important level to see broken. And for the NASDAQ, yeah, well, it's the same as the S&P. Rejections off these highs, 21,800 is going to be a level we want to break through. Have we seen it? No. Are we trapped in range? Yes. We'll be watching Nvidia very closely, of course. Nvidia could be the key to all of this. Go past 130 close, all of a sudden, markets go ballistic on the upside. Ethereum, what's going on here? Back to the most traded zone. No real worries yet for Ethereum. You want to see it hold this zone, though, pretty clearly. And we want then, of course, to go through 29,53,000. We managed to do that. We're taking out that high of the big flash crash. And you're going to see this pretty much in any coin. So whether you're looking at XRP or you're looking at Solana or you're looking at anything else, you're just going to want to see these levels, back above. So 2.8, let's say for XRP, above that. Really good sign. And again, these structures, the wipes that we saw, the literal records that were made last week in terms of wipe liquidation in crypto, it's all a sign of too many retail traders taking on maximum leverage. And that just seems to be the sentiment that's around at this stage. What about Bitcoin? Still holding up. We've got good levels here now. 102,500 is going to be wild if we do get above that. And even now, 100,500 is going to be a really good bullish sign. At the moment, you can see here, it looks horrible, looks really negative. Got these wick rejections. What is all going on here? But I always say patience, react, and predict. In this case, the market's trend is still up, and these look absolutely horrendous, but we don't know their shorts just yet. So just be very careful here. I think we're going to get some fireworks this week, so stay tuned. In terms of this week, we have so much news coming out. Obviously, we have Fed Chair Powell annoying us on Tuesday. We then have CPI numbers with Fed Chair Powell annoying us again. Like, he loves to come out early and then have a bit of a chat. Then he comes out straight after and has a bit of a chat. I mean, how ridiculous is this? But anyway, that's the numbers. These are all New York Times, just so you guys know. And then we've got core PPI, which is now after the CPI. I don't know what's going on either. Before it was before, the PPI was before the CPI, and we could literally read the CPI off it. But anyway, we've got PPI here after, which is normal, Thursday, Feb 13th. Then we go to core retail sales, which I guess you would expect to be relatively okay. You can see here the forecasts are kind of flat, but we did see a lot of American consumer debt coming through. So we'll see how that actually plays out. As always, guys, if you enjoyed today's video, then remember to subscribe. If you're lucky enough to be from Perth, Australia or Brisbane, Australia, the tickets are literally moving out and at this stage. So there are free events that we're running in February. It's just a few weeks away. It's going to be an awesome event, providing drinks and some little bits of food. You guys can come out and, of course, learn some stuff that I promise you I've never shared anywhere else. So come to the Perth and Brisbane centres if you can. You'll see the details in the links in the pinned comment down below. Thank you so much for watching, guys, and have a great weekend. We'll see you later.